Hi everyone, welcome back to today's video. So, couple of months ago, I covered four undervalued stocks for 2025, out of which three have performed exceptionally well and one has been flat so far. The real idea was not to hype stocks but to find real undervalued opportunities. So, on that note, in today's video, I'm going to speak about stocks you could consider for SIPing your money. क्योंकि अभी market has been in a downtrend for last 6 months. So you might think that okay, let me wait for the markets to fall and after that I will invest. But there is no surety about markets moving up or down from this point. Although it has taken a support at 200-day moving average, but it could very well break down from this point as well or even bounce back. So you can't just keep waiting at the sidelines for markets to fall. So therefore the question is, should I be SIPing in the market? So basically, SIP means if your salary is 50,000 and you are investing, let's say 10,000 a month. So this particular interval based investing is called as SIP. So now the question is which stocks you can pick in order to SIP and why even I am talking about the stocks. So before moving to stocks, you should understand in what type of companies you should be SIPing your money. As per general understanding, some people think SIP means investing via SIP in buy and forget type of companies. For example, blue chip companies like Asian Paints, HDFC Bank, and then die happily. So the answer is maybe. I have a more nuanced approach to it. So if you are planning to SIP, the stock should at least meet these three criteria. So the first criteria is in whichever industry stock operates, that industry's growth rate should be higher than economy's growth rate. Second criteria is margin protection, which means the company should have pricing power. Now there are bunch of strategies to do it. One is if the company's cost of production or raw materials is increasing due to inflation, it should be able to pass it on to customers as well. A classic case study would be Apple. It keeps pricing its products higher and higher. Or similarly, something like Hindustan Unilever. Or the second strategy could be it should be able to effectively bring down its cost of distribution. A classic case study here would be Asian Paints. Now, does that mean Asian Paints is a good SIP stock? No, not really. Why is that the case? That I will explain you in the video subsequently. And the third criteria is it should be able to at least maintain its market share or ideally grow it. But अब ऐसा भी हो सकता है कि in some case only two criteria are meeting, but they are wonderfully meeting. So in that case also it could be a great SIP stock. So on that note, let's jump on to the first stock. So the first stock is IDFC First Bank. Now one might have a natural question that why I'm even picking IDFC First Bank over something like HDFC Bank, which is comparatively a much better bank than IDFC. Or should we not SIP in HDFC Bank? So my short answer would be a no. Why? As the third criteria is not meeting. So look at HDFC Bank as a big target. So small banks like IDFC First Bank will come and eat into market share of HDFC Bank. And why is that the case? For example, IDFC is growing at a rate of 25%. Now looking at the size of HDFC Bank, it's very unlikely that it will be able to grow at a similar rate to IDFC First Bank. So therefore, it doesn't make much sense in SIPing your money in HDFC Bank. No doubt, it's a rock solid company, but now it's more of a valuation game where you bulk buy at reasonable valuation and sell when valuations are rich. And that's how I look at it. HDFC Bank's current market cap is around 13 to 14 lakh crore rupees. It would have made sense to SIP in this stock around here somewhere in 2009 when HDFC Bank's market cap was around 40,000 crore rupees when it was in expansion phase. And that's exactly where IDFC First Bank is currently standing. Now looking at IDFC First Bank, what matters is the growth rate of stock rather than current valuation. अब आप चाहे कोई भी प्राइस पे शेयर खरीद लो, अगर आप एसआईपी कर रहे हो इन स्टॉक, जो चीज मैटर करती है उसका ग्रोथ रेट. Now we can see that through branch growth rate for IDFC Bank has been outstanding, where in 2018 it had only 203 branches, whereas it has 971 branches as of December 2024. Now, do you think they will stop here itself? Absolutely not. Why? Look at HDFC Bank. It has more than 9,000 branches. So, looking forward, even IDFC First Bank can have 3,000 to 4,000 branches. So, assume that if the branches gets doubled, eventually it's likely that revenues and market cap will also double. So, going forward, IDFC First Bank is going to take away market share of HDFC Bank. And banking is a growing sector in India. So money can be made even on matured banks. But from SIP point of view, IDFC First Bank looks solid. On that note, let's move on to the second stock. So the second stock is Indigo Paints. And according to me, one of the best small cap stocks where you can SIP your money. Now, Indigo Paints is again a stock that will take away market share from Asian Paints. So if I have to SIP my money, should I pick Indigo Paints or Asian Paints? That's again a similar story to HDFC Bank and IDFC First Bank. So in paint sector, I would pick Indigo Paints or Asian Paints for SIPing my money. अब मैं आपको कुछ points बता देता हूँ which makes it a great SIP stock. So the first point is that the decorative paint market in India is growing at roughly 13 to 14%, which is much higher than economy's growth rate. Plus, it's a much needed product. The only problem paint companies are facing is high competition from new entrants like JSW Paints, Grasim Industries. So everyone is speculating that market share is going to be taken away from existing paint companies. But ये चीज में what people fail to understand is new big players are entering because there is money to be made in this market. So they see potential, therefore they are entering. If we look from numbers point of view, if you consider P of this stock, it usually trades around 50 to 55, and its competitor Asian Paints also trades around similar P. But right now, stock is available at a P of 32. Now you guys only decide if the PE of 32 is high or low. What I am betting on in terms of Indigo Paints is doubling of its market cap. So right now, as you can see, Indigo Paints is a 5,000 crore company, and this market cap is not very high. Can it become a 10 to 12,000 crore company over next 1 to 2 years? The answer could be a yes. It could definitely become. Why? Look at the size of Asian paints first and foremost, and growth rate of paint industry. So it's very likely that Indigo Paints will eat into market share of Asian paints. Also, looking at fundamentals will get more confidence. So if you see that company is at its highest ever revenues and highest ever profits, but is Indigo stock price at its highest ever price? No, so massive discount on stock already, and therefore I find it a good stock to SIP. Okay, so the third stock is Swiggy. Now Swiggy has a very clear competitor which is Zomato. Firstly, we'll go through the technicals for the stock, and फिर मैं आपको कुछ points बता दूंगा which makes Swiggy a good stock to accumulate systematically. So Swiggy recently got listed in November 2024 around rupees 320. Then it consolidated a bit, then gave a small up move and then corrected significantly. And now it has been consolidating again. Does that sound somewhat to Zomato stock market journey? Yes, it does, right? Even Zomato after listing consolidated a bit, then gave a small up move and then corrected significantly. So that was the price discovery phase for Zomato. Also, it was a loss-making company at both net and operating level back then. Similarly, for Swiggy, this is the price discovery phase. Now, Swiggy and Zomato has a very similar business model to each other. So now you guys only tell me कि अगर Zomato profitable हो सकता है, तो what would stop Swiggy from being profitable? Also, in the recent quarterly result, Swiggy's management has given guidance of contribution breakeven for Q3 of FY26. Sounds fancy, right? In simple words, what they meant was Swiggy expects that by the October-December quarter of fiscal year 2025-2026, every order will cover its direct costs, things like delivery, packaging, and payment fees. So the company starts earning true margin on each transaction. Now Zomato's current market cap is around 2 lakh crore, whereas Swiggy's market cap is around 80,000 crore rupees. So despite operating in the same food delivery and quick commerce space, Swiggy is valued at less than half of Zomato right now. So with a leaner valuation, a clear path to per order profitability, and multiple levers to drive growth, Swiggy offers more upside than Zomato, making it a great pick for disciplined SIP strategy. So we covered three stocks where you could consider SIPing your money. Does that mean HDFC, Asian Paints, or Zomato are bad companies? No, nothing of that sort. Just the problem is they don't meet the criteria required in order to SIP your money. Also, if you are looking to bulk buy opportunity in this current market, Asian Paints is a great pick considering its current valuation. And if the response is good enough, I will make part 2 of this video. Now you tell me in the comments if you own any of these stocks in your portfolio. So that's it for this video. Till then, take care.